Yo, good evening, everybody. Thank you all for tuning in. Today, I'm going to be sharing with you how to find out what lot size you should be using. And the concept and the way that I determine this is very easy, and I think will be beneficial to everybody who's watching this call. Now, to dive right in, guys, it's very simple. There's three things that you already know or three things that you could kind of make up. What I mean by that is the first one, I'm going to write this down for you so you all can see, okay? Now, the first one, you're not making this up because you already know. The first one is, what is your equity that is in your account, right? So for this example, let's make it pretty easy. We're going to say we have a $100 account, okay? There's $100 in our account, okay? Now, the question is, how much money are you willing to risk per trade, okay? For me, I usually do about a 5% risk, right? Off of a $100 account, 5%, if I was going to risk 5%, that's me risking what? $5, correct? So I'm going to be risking $5. Remember, that's per trade. I'm going to be risking $5 per trade. Now, you also want to figure out how many pips are you going to be risking per trade. For me, I always risk 30 pips. No more, no less. So I'm going to be risking 30 pips. Remember, that's per trade. Okay? Now, we have our three things that we need to figure out. We have our account balance, we have how much money we're willing to risk per trade, and how many pips are we willing to risk per trade. Now, the question here is, I'm going to do another one. The question here is what is our lot size? What is our lot size? So that's what we're going to be figuring out today. So I'm going to break it down for you guys very easily, okay? Once you have your three things, the next thing you need to do is start with what you're going to do is you're going to start with the smallest lot size. Okay, what I mean by that is, let me type it up so you guys can get that visual. The smallest lot size, as we all know, is a 0.01 lot size. Okay, now we're risking 30 pips per trade. So at what we call a penny lot size, if we're risking, with this lot size, if we're risking 30 pips, how much money is that, right? If we're risking 30 pips, that means we're going to be risking $3. Okay, oops, $3. Okay, now what that tells us right off the bat is, well, the question is, how much money are we willing to risk? We're willing to risk $5 per trade. Well, at a penny lot size, we're only risking $3. So that means we could risk more than a penny lot size. So let's go ahead and let's move on to the next lot size. Okay, so the next lot size would be a 0.02. Let me move this over. A 0.002, okay? Now, if we risk the same amount, 30 pips, how much money are we risking? Well, in this scenario, at a 2-cent lot size, we'll be risking $6. Okay, so now, that's over our $5 limit. So what that means is we will not be using a 2-cent lot size. We'll be using a penny lot size for each trade, okay? But as your account continues to grow, as things continue to get to that next level, let's go ahead and let's fix this. Okay, now I'll show you a different example. Let's say we have an account balance of 750. Okay. We have account balance of 750. We're going to be risking 5% of that account, which is 5% of 750 is, well, 10% would be 75. 5% of 75, which would be, what was that? Hold on one second. About $38. No. Yeah, about $38. Okay. So you know what? Let's round out. Let's say we're gonna risk $40 per trade. $40 per trade. Okay. So we have our three things. We have our account balance. We have our risk. How much, and then how many pips we're risking per trade. Okay. So now the question is, what is our lot size? So this is very easy to figure out. All right. So let's start with the smallest lot size, 0.01. Right. We're risking how much? 30 pips. All right. So what is that equivalent to? We're risking 30 pips. That's equivalent to $3. But guess what? Are we willing to risk a lot more? Are we willing to risk a lot more than $3? Yes, we're willing to risk $40. So move on to the next one. A 0.02. All right, risking 30 pips equals what? $6. Okay, oops. $6. Okay, now we're gonna go and we're gonna skip a couple lot sizes now that we know these smaller lot sizes isn't getting us anywhere close to our $40 risk limit. Okay, so let's go ahead. Let's jump to a 0.05 lot size. You know, risking 30 pips, right? If you did the math, that's coming out to about a $15 risk. Okay, now we're willing to risk 40. So let's jump it up another notch. Let's go to a 10-cent lot size, 0.01, risking 30 pips, right? That's going to take us to about $30, right? We're risking now $30. So now we know, okay, we can do more than a 10-cent lot size per trade if our account is at $750 and we're willing to risk $40 per trade. So I'm just breaking down for you guys how to figure out exactly what lot size you should use. It's very simple, guys. You have figure out what's your account balance. How much money are you willing to risk per trade, and how many pips are you willing to risk? Once you figure out those three things, do the math and figure out what your lot size should be. But we're going to go ahead, we're going to continue this so we can find out what our lot size should be in this scenario, okay? So we know we can do higher than a 10-cent lot size. Let's move on. Let's skip another one. Let's do a 0.02. You know, risking 30 pips, right? If you did the math, let's say, so that's, I got to do the math in my head. 10 cents, you know, I'm going to do it on my calculator so I don't mess it up. We're going to do, that's $1.20 per pip, times that by 30. That's $36. So now we're risking $36 if our lot size is a 12-cent lot size, but we're willing to risk more than that. So let's go ahead and let's jump to the next one. Let's go ahead and let's do a 15-cent lot size, right? Risking that 30 pips. That would bring us to, let's do the math, $1.50 per pip times 30. That brings us to $45, right? That means we're risking $45. So what that tells us is a 15-cent lot size is too big of a lot size. We need to go back down. We need to, because we're only willing to risk $40, not $45. So let's jump down to, let's say, let's cut it right in. Let's do, we'll just do a 14-cent lot size. You know, risking that 30 pips. All right. 14, that's $1.40 times 30. That $42. All right. So now our risk would be $42. All right. Still too big. So let's continue. It's looking like a 13-cent lot size is going to be the winner. But let's go ahead and let's figure it out, and let's make sure that that's our lot size that we're going to be using, right? We're going to be risking that 30 pips that we already figured out. And what is that going to be? Let's do $1.30 per pip. All right, that equals $39, right on the money. There we go. So what we just figured out is now if I have a $750 account size, I'm willing to risk 5%, which is about $40. And I'm risking 30 pips on this trade. That means if I do a 13-cent lot size, then that would be right at my $40 of risk that I was willing to risk. So now each trade, everybody's going to be different because some people want to risk more. Some people have different amount of equity that's in their account. So that's really all up to you. But what I'm here sharing with you guys is if you figure out these three things, like I said, I can't repeat it enough. Your account balance, right? You already have that answer. Then ask yourself, how much money are you willing to risk, right? Then ask yourself, how many pips am I willing to go down and draw down, okay? For me, it's 5% with 30 pips of drawdown. Then once I figure out that information, I go ahead and I plug in the certain lot sizes to figure out lot size is correct for the amount of money that I'm willing to risk, okay? So I hope you guys understand everything that I just went over. If you have any questions, feel free to reach out and ask me. But guys, this has literally helped me take my trading to the next level just by understanding on what lot sizes I should really be using. So guys, much love. I will talk to you all later. Deuces.